Welcome back to the Daily High. What a day to come back to. I took a bath on that trade, Tone,
I know,
in
we
the
got to
real
change the
world.
show name to the Daily Low at this point.
Not impressed. I can't wait to see it. But I mean, you lost money too, but I went that the first time I really levered up, and I must be down at least $300 on the thing. That's not good. But I mean, there's so much to talk about in today's show. Today we've got time. We've got Tone's relaxed. He's got his little puppy next to him there, so we
Yeah,
can
he's
really lean into
sleeping,
it.
but let me. There he is. Here, you want to be on camera, buddy? There
It's a
he
good
goes.
looking dog.
Yeah, no, he's passed out. I'm up before him. He wants to keep sleeping.
Yeah, I mean, there's heaps to talk about in today's show. Bitcoin is dropping, but is it something to worry about? Maybe. Let's go into it. We'll start with the
Yeah, no, I'm
trade.
wearing. I'm back to wearing a buy the dip shirt. I think I
It,
think there's going to be a dip here. We just got to try to catch it at the right place.
well,
You
let's look at it.
wanna?
Let's look
Who's
at
going
it.
first? So should I go on screen
Well,
share first?
you won the trade, so I'll tell you how badly I did.
All right, looks like I am down 125 at my
Uh-huh.
7x leverage off of my initial capital of leverage capital of 6510. I am gonna open float. I was at 930 minus 125. Damn, I'm down to 805. Welcome to trading, folks. Thank God that's not my real account. Yeah,
Yeah.
we may have to alter this. We may have to use real money. Maybe it'll make a difference.
Yeah, maybe. Yeah, I lost $300 on the trade, so I'm down to 745. So it's not good on my end, that's for
Oh,
sure.
I'm up on PNL now.
Yeah, yeah, yeah. Give me back the screen share for a second. I'll move the board and I'll what I'll do is I'll move the board and I can't hear you for a second. Give me 1 second.
Yep. Yeah, Matt can't hear, so I can just talk a bunch of shit. One of these days there'll be like a little things on, well, what I was saying about Matt, now that he can't
Sorry,
hear.
mate. Yeah,
All right,
sorry,
you
mate. We're
back.
back
Excellent.
back to zero. Back to zero. Shite. Oh, I'm so sorry. There was a great comment in the show last night that I'm swearing too much. I'm sorry. I'm sorry. I just almost did it again. So I got to watch it. I'm gonna watch it. It's very hard to get an Aussie to stop swearing. It's part of our
Yeah,
culture. But
that is true. That is true.
I'll do
All
my
right. So
best. All
Matt,
right.
so wow, you were down. Were you down 300 in PNL? What's your
Yeah.
PNL?
Yeah. $300.
Oh wow, the PNL is only 108 now. I already gave myself minus 125. I could have waited 30 seconds. Could have given myself less of a hit.
No, no. All right, cool. It's funny that we're back at zero. So we'll think about maybe as we'll never get to 10 at this point. So maybe we should just do something else. But we'll get into that later. Anyway, let's go into the charts because people want to know: is this the end for Bitcoin? Are we going to zero? What's happening here, Tone? Do you want to take it? You want me to take it?
You went first yesterday. Let me. No, go ahead. Why don't you go first?
I'll go
I'm gonna
through it
think about what I'm gonna say. I'm gonna take every minute before I do my analysis.
I'll go through it first because you've got to have a look at the ETFs today, and that's what I'm really hanging out for in this show. So we'll start here. The blue line here was a trade that I was in real life, and I closed the position here at a loss. It happens, all right? It's a bad trade. I'll leave these in for now. I gave back a 0.032 or something like that. So I still was up from the week before and the weeks before. I'd had 5 consecutive winning weekly swing trades in a row. So I'm still doing okay. But I didn't want to, because at the time here, you guys got to realize it's 11 p.m. for me in Australia. And after we do these shows, I go to bed. I didn't want to sit in this trade overnight. Like if we come back up, I can easily re-enter into this trade. We're looking at the 4 hour time frame right now. I do not like that we've closed beneath this cluster of SMAs here. It is rolling over. We're still, technically within a range, and absolutely so. Even though here did actually get lower than here, so I don't want to go to bed and wake up in the morning with the price down here. It's just that the trader in me is just like, nah, I want to have a nice sleep. I'll take the loss, all good. If we wake up and the price is up here and tomorrow's show, I'll have to eat my hat. It's part of it. It's part of it. I'm still Haven't changed any of the longer term positions that I'm in. Please, if you haven't already, watch my show on diversified trading within a single asset. So as I go to, I'll go to the weekly time frame just to ram this point home. This is only one of my positions. I'm still long from 17,200 in a spot no leverage position. I'm still long in a position from 27,200 spot no leverage. I'm not interested whatsoever in selling those positions. They're both fantastic entries. I'm happy to stay in them as long as I can. But in this leverage position, I'm out. I'm out. I'm out. Now, I might as well continue on with a weekly here as I pull up the MRI count. Um, it's nothing really to be concerned about. Obviously, looking at that looks like absolutely nothing to be concerned about with 4 days and 12 hours left. We're midweek, barely midweek. This could very easily end as a green candle. So there's nothing to freak about in those long-term positions I have, nothing whatsoever. I do not like that we are so far extended from even my 7 SMA here. So I could definitely see us pull back to that 46 mark, and it's still maintained absolutely all of the market structure on the weekly time frame. I'm not concerned about that at all. It's a fair way off. 12-hour time frame. Look, we might just come back down. It's the same strategy, but just the moving averages will be tighter. Come back down. That would be the next thing I'm looking at here. If we're going to continue to come back down, I would see that 49,800 mark being a great, as Tone's shirt says, buy the dip zone from there. Next, I'd be looking for the 50 and then be looking for the 200. But by that point, that would be an insane buy the dip if it flash crashed down there. It's way too early to be talking about those kind of marks. I'm not even interested in entertaining those kind of things. Back to the 4-hour time frame, however, this would be if we were to get into the green wave while remaining above the lucid SARS, the modified lucid SARS. This is it's still a very long way off at this point, but this would be an insane buy the dip, even if it takes time and we roll over. We'll talk about it more if it ever comes closer. This would be an insane point to buy. But again, we're talking way down the track. I'm not considering this as a viable option right now. Especially like when you look at the 4-hour time frame, we are still range bound. Me getting out of this position here, and we've just come up and touched it again. I mean, I could re-enter the position right now and be back where I started from a better vantage point. But the thing is, like we could easily just get back and we got about $800 from this point, and it's nothing to worry about. So I'm not overly concerned, Tone. I'm not overly concerned, but personally in that swing trade, I want to go to bed and I don't want to sit in a trade overnight. And I don't want to put a stop loss in it way lower. I just got out of it. It was only a 2.75x leverage position. All good. What do you recommend?
Yeah. Oh, wow. Look at this candle go, man. The current 1
Great.
hour candle.
Great. Fantastic.
So on the 1 hour, we had an MRI buy at 5 in the morning, New York time. The following candle traded lower, but the current candle is trading higher. So it's very possible that on the 1 hour chart, we're going to get a reversal off of these candles. Now, personally, I don't like to see the swing low take place 2 candles after an MRI buy, because by this point, it makes me super bearish. But I was still asleep. I was, well, I was technically waking up. My alarm usually goes off around 6:30, and then I roll out of bed around 6:45. But I usually don't look at my computer screen till 7 a.m. And this is not good. This was not a line I expected us to lose. Though this is like a stop loss line. It's not a real line. Let's go to the daily. Wait, where's my daily chart? This is, oh, maybe they switched sides. Yeah, they switched sides. Okay, this is my daily chart, and I can swear I had a range drawn somewhere, but I don't really see it anymore. Huh. Maybe it's on the other, oh, it's probably on the other screen. Okay, so these are like stop loss lines and stuff. Let's go back to the 1 hour chart. The 1 hour chart is showing a little bit of promise. If we can hold this high and then trade higher next candle, we got a little bit of hope on the 1 hour chart. The problem is you have a consolidated moving average cluster, which is now monster resistance. And that is not good. This daily chart, we've now been consolidating for 7 days. And the current candle is sitting at a new low close. If we do not rally and we do close at a new low price after 7 days, I will no longer be all that bullish. I would expect us to come down to some form of support. And at the moment, that form of support is at the next moving average, which is rising super, super quick. That's only the 20-day moving average. So I'm going to assume already that we are likely to go there like this. Now, the other thing that I don't like on a daily chart is the RSI. This is an RSI level where I give up on the bullishness. For me, whenever the RSI comes out of the overbought territory and crosses the 70% mark, right here is a bearish trade. Right here on December 10th is also a bearish trade. And right here today, if the RSI closes this low, right, we have just under. So you can see the level of the RSI. No, it doesn't show me the level, but I can see that the level is around 69. So we just dropped below 70. That is a point of concern for me. And you can see what happens the last time we crossed this low. Price rallied up, but the RSI never went back into overbought. I don't have a problem longing the trade above 70, but I do have a problem going long or staying long in the trade after the RSI has come down and broke 70 from the upper end of 70 of the RSI to below 70. That is where trouble starts. Now, the MACD, what did I just do? I don't have two bitmax things here now. Did I just drop the MACD?
Looks like it.
Is there a back button? Control, Shift.
No.
No, there won't be, right?
If you closed it, you'll have to reopen it.
I didn't mean to close it. Let me close that. I am going to have to reopen it. I don't think I have my own MACD, so I have to use the standard one. Favorites, moving average, convergence, divergence, moving, there it is. So I'm going to move it up and up. And this should be up. Real quick, I'm going to glance at the funding rate. The funding rate has actually been favoring the bears lately. And here is the MACD. I'm going to move the MACD up one. And the MACD is showing us a very, very good high, but we have started to turn, but it hasn't crossed yet. So the MACD is not yet concerning. And the CMF is really, really bullish. So it's really the RSI that's of concern. The daily chart right now is the most important one to me, and it is rolling over as of this morning. Now, one of the problems with doing the show at 7 o'clock in the morning is that everything changes at 10 a.m. My favorite time to trade is between 10 and 11. And people have asked me, have I put this 25% back long in the market, back to a bullish allocation of Bitcoin? And my answer has been no, I haven't. And the reason why I haven't, and I've wanted to go 100% long Bitcoin again, the problem is between 10 and 11 a.m., every day, well, yesterday, which was Wednesday, and Tuesday when the market was open, and even Friday, is that between 10 and 11 a.m., the market has been dropping and looking abysmal. And if the market is dropping and looking abysmal between 10 and 11 a.m., I'm not going long in the trade. So let's see what happens today. If the market is super bullish today between 10 and 11, I will completely change my mind. But as of right now, I am kind of bearish on the market here on the daily chart. Now, the Consensio is still very, very bullish. You need these moving averages to cross over, and they still need like at least a few more weeks before that happens. And as Matt stated, the weekly chart is very, very bullish as well, just a little bit of a pullback. So I would love for this to be the perfect buy the dip. However, if this is the perfect buy the dip, I would want it to come down not to the 20 period moving average, but over to the prior horizontal support level. And you have two options here. One, the true horizontal support level of 44,000, which was resistance for Bitcoin, other than a few days right before the ETF launched. So that's really good support. You have the 50 period moving average that is now rising and sitting at 45,000, and it will probably rise a little bit still. Or you have the prior swing high, which is at around 46,000. So this area between 44 and 46,000 is the great buy the dip area. So until I see some serious strength, I'm gonna be a little bit extra cautious in this market. Your
Uh,
thoughts?
yeah, very, very well put, Tone. And I feel exactly the same way. If you just look at that chart right there, I see two things. And this is from my leverage trading position. One, if we while the wave is green, I'm still macro completely bullish. I'm completely bullish, and I'm in that buy the dip zone. But the buy the dip zone is not here for me. It's off something substantial. I'd be looking at depending on what time frame, but if you look at the daily, one of your moving averages there, if that's what you feel comfortable with. I have my own moving averages, which I feel comfortable with, or I'd go to the 4 hour time frame and try and get back inside that green wave would be ideal. So I'm still looking for that pullback. That's option A. Okay. And option B is absolutely that if we just recover and we get strength again and we look like we were yesterday at that the near breakout point, if we go back up to 51, let's call it 52,000 for argument's sake, I could easily re-enter back then as well. This is a swing position that I can chop in and out of. But in my longer term positions, I've got nothing to concern me at all. I'm still absolutely macro bullish. I'm in cash at the moment in my swing trading position, looking for a better entry. That's it. Or
Yeah,
a
it's gonna be
worse
really
entry.
hard to put on a trade in about 20 minutes.
Yeah, yeah, because it could absolutely. Bitcoin's a funny beast, right? I mean, it could vary. This could be the best day ever. And yesterday, I really want to talk about what happened yesterday really quickly. How when we entered the trade, we spiked $500, and then we dropped $2,000, and then we bounced back $1,000. Like it was a high volatility day. And when we bounced back, I was very very happy because we shot up. And then I felt like, well, all the longs are going to get wiped out here, and we flew back down. And when we bounced off, after we flew back down, I was like, okay, that has just been eaten up. This is the best bullish signal ever. That we liquidated all those high leverage longs, and then the real money, the smart money, bought back in and bought it straight back up. But then today's been a bit different. In the last 9 hours, how we've just torn down like that, that's not a sign of strength for me. But yesterday I was, when we got back to our entry price, so yeah, so we shot up, and I was like, yep, cool. Then they got
Right. So
liquidated,
right
bang,
here, so
yeah,
we
go
entered
through
the
it,
trade at around
yeah,
we start the show at 7:30. So we entered the trade around 8 a.m. So literally
Mhm.
the moment we entered the trade, we ended up with a 1% candle for a $600 up move immediately.
Jeez,
But
yep,
this is why I always tell people this is the worst possible time. Now that there is a Bitcoin ETF, Bitcoin follows the stock market liquidity and the stock market hours more than it did a few months ago. And as an experienced trader, I never ever trade the market at 8 a.m. pre-market or even at 9 a.m. the first half an hour of market open. All my decisions are made at 9:55, between like 9:55 and 11 a.m. That's when all my decisions are made. I rarely make decisions, maybe up to noon. I rarely make trading decisions after lunch. I may enter a position after lunch, but my decision to enter that position is made between 10 a.m. and 11 a.m. That's when all my trading decisions are made. So I, of course, wait for that time. And what happened between 10 and 11 a.m.? Well, Bitcoin is on the hourly chart, is giving us a red star candle back to the bottom of the range. So there's no way I'm going long in my retirement account on Bitcoin that day. I'm going to wait till the next day. And the next day, this is why it's now sitting lower. And if we go to the day before, if we go to 7 a.m. on the 19th, we go to 7 a.m. on the 19th, where are we here? 18th, 19th. We were right here, same thing, right? It looks absolutely awesome. We are sitting above all of my areas, and I'm right here, 7 a.m. This is where we enter our trades, and I'm all ready to go long in Bitcoin in my retirement account, put that 25% back in the market. All we have to do is after 10 a.m., sit here above 52,500 at new highs. But what happened? Here it is. Here's the 9 a.m. candle. It's another red star candle. Here's the 10 a.m. candle. It's not able to cross those tops, and bam, the 11 a.m. candle crushes us, and that ends it, right? There's no way I'm adding that 25% back in the market on yesterday, well, 2 days ago, either on Tuesday. So I do need a day where we're spiking like this, but not at 8 a.m., at 10 a.m.
Yeah.
Between 10 and 11, if we're going up like this, that's when I'm going long in my retirement account. And that just has not happened yet. And that's why I'm 25% long. And today, to be honest, like right now, we're rising pre-market. But if we start falling like this at 10 a.m., I may take more off the table.
Mm-hmm. Yeah. Very, very, very interesting. Very interesting. That's incredible. I never think things of time based, but maybe I fucking I'm sorry for sorry. Maybe I should, because that was that was brilliant. And that move where we break out and crash down and then recover, that's in Bitcoin world, that's awesome. I love to see that, because I love to see that all like the dumb money get liquidated, bang, and then the smart money build it back up, and then on the second attempt it goes, that's when the breakout comes. And then the fact that we've meandered here down, yeah, it's not super good for me. All right, we can move on.
Yeah, I just want to do a quick shout out. Matt did an awesome show yesterday with Chris Dunn. Chris Dunn is someone we know well. He came to the Bali Financial Summit. I, of course, remember Chris Dunn when he first published his book about trading Bitcoin. That was back around 2015. So that's when Chris Dunn came on my radar. And a very experienced trader, him and his wife Nikki Dunn, occasionally comes on Twitter Spaces with us. And again, if you scroll down, you'll find our Twitter Spaces. You'll see her image over there every now and then. We also published a Twitter Space from this weekend. Joe Colasari was not on that space. It was just me. So we talked a lot about macroeconomics. And you definitely want to check out this episode with Chris Dunn. The first 30 minutes is spent on how he became a trader and his career. And the final 30 minutes is actually spent on looking at charts and the market. Great job. I was watching it yesterday. So it was really, really cool. That was episode 2 of Trader Talks, followed by the original episode with Vibho Swami. And the other thing I wanted to mention real quick is what is happening in the ETFs. I got the latest data yesterday, and let's go in that data. This is data as of Friday. There are several very surprising things that stood out to me, and tweeted it out as well from the Financial Summit channel. So the most, for me, the two really key takeaways. One, there was 47,000 Bitcoin of net inflow into the Bitcoin ETFs. That is a staggering number. That is actually the biggest number we had. So it's increasing. And looking at these numbers in hindsight, I am actually now surprised that the weekly candle last week was up so little, considering how this candle here had a net 47,000 Bitcoin increase into the ETFs, where the candle before had half as much. So this massive candle, though I will say this massive candle was coming off serious consolidation, but the liquidity should have been even lower going into last week. Now, this candle that ended February 16th had 47,000 Bitcoin of inflow, and the candle that ended February 9th only had 23,000 of inflow. Now, GBTC sold 12,000 Bitcoin. People are waiting for GBTC to sell about 35,000 Bitcoin from the Genesis and other funds that need to sell their GBTC. But that was one key takeaway, how much Bitcoin has entered. And I don't think we're going to match this. I don't think this much inflow is going to come into Bitcoin this week, especially if Bitcoin is dropping a bit. Most people don't buy when things are dropping. Most people are buy when things are rising. Now, the other key takeaway is how the iShares ETF is running away from the Fidelity ETF. That is something I am not happy with. So if we look at earlier this month on February 2nd, the BlackRock ETF only has 10 extra thousand Bitcoin, well, 11,000 Bitcoin more. So it's 62,000 versus 72,500. So it's between 10 and 11,000 more Bitcoin in the BlackRock ETF. Look at it today. Today, the difference is 86,000 versus 120,000. That is a 34,000 Bitcoin difference between the two. And last week, BlackRock added 32,000 Bitcoin, while Fidelity only added 13,000 Bitcoin. That is, unfortunate that the BlackRock ETF is becoming so much more dominant than even the second best, which is the Fidelity ETF. If we look at liquidity, if we look at trading volumes of these ETF, again, the iShares is running away. The iShares for the last 30 days is now, maybe not 30 days, but what do I have on the map here? How many days is that? How many trading days? That's 12 trading days. So over the last 12 trading days, which is like 20 days in total, about the last 3 weeks, because this is trading days versus all the days, including weekdays and holidays, you see that the BlackRock ETF is trading 17 million shares per day. Now, however, Grayscale and Fidelity are almost double the price. So that dampens it a little bit in trade volume. But still, the liquidity is definitely with the BlackRock ETF. It's almost doubling the liquidity of Fidelity, and it's already higher in both traded value and traded shares than GBTC significantly. So these are the things to keep in mind. Also, for some strange reason, it looks like the Galaxy ETF, Galaxy Digital ETF, actually lost Bitcoin inside the ETF. Maybe they're not displaying the right data on the website, but I found that to be a little strange. It was the only ETF out of all of them that lost some Bitcoin. This last one doesn't really count. I should probably remove it altogether. It's kind of irrelevant. All right, so there's an update on, because people have been asking, so there's an update on the ETFs. Matt, any questions?
No, it's very, very interesting. It's very interesting. I need more time to soak this in. But I'm so glad you're doing this, man. This is great.
All right.
Why don't we just check the S&P 500 very quickly, and then we'll wrap it up with the trade, eh?
Yeah, so on the S&P 500, let me open these things up. That's gold. Gold's not interesting. Here's the S&P. The S&P is pulling back a little bit. I think we did have an MRI top not that long ago. No, we're coming up on a weekly MRI top next week. So that could be additional downward pressure. The S&P did get up a little bit. And I'm curious about NVIDIA. I don't know if I didn't talk about NVIDIA much on this show, but on Twitter Spaces and also on my YouTube channel, when I do a video like once or twice a week, I talked about how I think NVIDIA got a little bit, got ahead of its skis a little bit, as people like to say. And I do think NVIDIA is going to pull back, especially with earnings. The daily S&P did give us a nice green star candle, but has pulled back. This is one of those days, one of those times where the MRI is not doing a great job in identifying a potential bullish trade. But like, real quick, I do want to pull up NVIDIA, and then I have one last thing to say about the market. Uh, I'm staying here in Miami with a friend who's all about Tesla. I now have a couple of friends where they hold only Bitcoin and only Tesla stock as the only stock. And they have very good reasons for it. So I'm going to take another look at Tesla. This Tesla monster pullback might be coming to an end. And I did mention somewhere, I forgot where already, that the trade with the Magnificent Seven could be to hold the middle five, and then you short the leader and long the loser, and the loser has been Tesla. Real quick, looking at NVIDIA, right? NVIDIA had a monster pullback, and earnings is not even here yet. Earnings is coming tomorrow, and it already pulled back. So it's, yeah, we're going to revisit this on our Twitter Spaces today, the Financial Summit Twitter Spaces, because on Sunday Space, I did say that, man, I think NVIDIA has topped right here with the MRI, and people
Mm.
need to be cautious on NVIDIA, but now that it already fell a little bit, so I wanted to glance at that. So the last thing I wanted to say was somebody that I know sent me this image about the S&P that I wanted to just throw in here. And it's an image of, historical S&P for the last 30 years or so, almost 30 years. And it shows you the 200-day moving average, but also shows you the New York Stock Exchange, 90% downside volume occurring within 3 sessions after a record high. And when I look at this, right, this is not that concerning to me, because the only time this is really an indication of a bad top. So we have 1, 2, 3, 4 levels here with one to be determined. But in these 4 levels, if you look at this one, right, we still were going up for at least another year. And while
Mhm.
the S&P 500 did not go up all that much, the NASDAQ was up over 25%, maybe even more. Like the NASDAQ was actually going up exponential here. It was the
But there's
S&P that slowed down.
and just looking at that, there's two existential worldwide issues that occurred on the two biggest drawdowns as well. The 2008 financial crisis and the Black Swan event that happened through
Right.
COVID
And
crash.
that's the thing. See, this was a black swan event. It's not even a black swan event. It's more like a purple or like whatever the pink event, because the I'm not going to get too political, but this drop was not supposed to happen. This was completely artificial based on a crazy reaction to a cold. So yeah, so this wasn't actually supposed to happen. So we don't know what would have happened in a real environment. So this I am ignoring, okay? Because this was man-created drop. This
Well,
one,
so was the 2008 one.
well,
There's a
no, the 2008
man-created
one was a
drop.
lot more natural, right? I mean, the government did not like tell companies you can't have your doors open to your business. So
Mhm.
the 2008 one was more of a naturally occurring one. It wasn't created by the government. Um, and this is the only one, but even this one still hit a all-time high later on. And this one was just a short-term correction, mostly based on the European Union imploding. So to me, this is not a reason to get scared of stocks. Now, if we lose the 200-day moving average, we can discuss. But in all these cases, the 200-day moving average wasn't lost till, like in this case, a year later, in this case, like 2, 3 months later, in this case, maybe even 2 years later. And over here, it wasn't a big deal. So to me, this is, yeah, it's not great, but it's not something to panic over. You may still have another year and another 20% rise before, things go south.
Yeah, it's got a 2.5 year window to be right,
Right.
basically.
Right. Just like the inverted yield curve, right? Like I remember discussing the inverted yield curve like 2 years ago. People are like, oh, the yield curve's inverted. We're going to crash. We're going to go into a recession. I'm like, the yield curve can stay inverted for 8 years. Like, come on, guys. It's you look at the charts and you wait for new lows to be taken out. Real quick, I'm going back to this same chart one more time to tell people when they should panic. So in this first case, let me zoom in here. So in this first case, the time to panic is when you lose this 200 period moving average, you pull back and you can't break it above, and then you break it down again. So the time to panic here was actually in the S&P anyway, not the NASDAQ. The time to panic was like 3 years later, right around here. Over here, same thing. The time to panic is probably right here when you have lost this low and this low to the downside. And over here, the time to panic was either here on this drop, again, a year later in 2015, or even on the second drop. And then you're back to being bullish when you recaptured the moving average. And finally, here with COVID, look, again, it's different, right? The time to panic was when planes stopped flying, which was like an I mean, this one caught me by surprise. I didn't think the world was going to be this stupid, but it was. So this one was a little bit trickier. And right now, man, you got so much time before you need to panic. It's crazy.
Yeah. Yeah. Worth noting, but yeah.
All right, I'm like delaying. Oh, there he is. I'm like delaying
It's going to be tricky. This is
entering the
tricky.
trade
This is
here
tricky.
because it's going to be tricky.
This is tricky. Hmm. Who's screen sharing?
All right, let me do it.
Okay.
All right, we're still rising, and once
Yeah.
again, it is 8 in the morning. Considering I haven't gotten the direction right in like 14 days, this is going to be very, very tricky. Okay, so I still, let me know when you've entered your trade,
What's that?
and
What's
let's
our
get
price? What's
our
our
price is
price?
51,370.
Okay.
Okay.
Okay. I'm done.
You done? Okay.
Mhm.
So, considering how during the time of our show, it always does the opposite of what it actually ends up doing by the end. That's a tricky part. I'm actually going to stay with the long trade, but I'm not as confident in it. So I'm going to lower my leverage down to 3. So I am now at a 3x leverage trade, but I am going to stay long. I'm going to give this market one more day to break even. And you know what? If we recapture 52,000 and we continue to consolidate, I will actually remain bullish in this market because as the moving averages catch up, I still get more and more bullish. This is concerning. And if tomorrow we're sitting below 51,000 during our show, everything will change. But I am giving this one more day to recapture 52,000. So I'm going to go long 3x leverage at current price.
Cool.
Over to you, Matt.
What I said in my real trading position, if we recapture 52, I'll re-enter the trade again and go long, and I might try and front run it. We'll see. I'm still completely bullish across the board. Across the board. Don't worry about that. But I want to mix things up. And for all the people that hate me, I'm going to turn a bad trade into a worse trade by having some fun with it and going 10x leverage short. Who cares?
Wow.
Let's go. I want to see a winner in this competition. I want this competition done, and it might even be tonight.
Yeah, we're gonna really mix it up for the next one. We're not sure how yet, but there will definitely be changes.
I can't wait. The show's been it's been a bit solemn tonight because it's early in the morning for Tone, and I lost money this week, and so the energy might have been a bit low. So I'm going to try and bring it up with this trade.
Oh, Matt,
All right,
one more question. We do have a question from the live chat. It says, can
cool.
someone please confirm, are those Bitcoin ETFs available for anyone, or is it only to the institutional investors? They're available for anyone who's able to trade American markets. So you do need access to the American stock market. Yeah, and they are available for anyone. It's you don't need to be institutional. Now, in order to, like, uh, cash in and out from the actual Bitcoin inside those ETFs. Yeah, you need to be institutional. But as far as like buying and holding the ETF, yeah, anybody can do it.
Yeah, and if you're an international person, an Aussie or something, it's very easy through your broker to apply for a like a Swift account or whatever to you just have to submit your taxes and pay the taxes. But it's very easy to apply for that. It takes 24 hours. Easy to do to trade the US markets. All right. Thank you so much for watching the show. I hope the Bitcoin does rally. I hope I lose the competition by a lot. I hope I re-enter the trade in the real world, and I hope we go to $1 million. Otherwise, please use the affiliate links in the description below. 2bit and Bybit, fantastic. 2bit and BitGet, excuse me. It's the best exchanges that I use. Please visit tonebase.com, alphanumetrics.com. We'll see you tomorrow. It's going to be fantastic. A lot's going to
Bye,
happen.
guys.